currency manipulation.
A currency manipulator. China is a currency manipulator.
Hey guys, this is Max and welcome to my channel. For a very long time, the Chinese currency, RMB, has been identified and manipulated by countries, but this policy has remained by Chinese central bank for decades. However, the situation has recently shown a significant change. On May 19th, the official of Chinese central bank said the RMB will appreciate in the near future and gradually abandon the exchange rate target, which will hugely switch the previous currency control. So why China give up manipulation? To discuss the RMB, first we have to go back to its anchor currency, dollar, the reference of RMB's value. First of all, we know the US dollar is the standard of value for most currencies around the world. But from 2020, the US dollar has devalued by 14%, which is not a small drop. So the US has no longer an inflationary expectation, but a reality. That's why you may find a lot of people around you are considering investing in property this year. In addition, the US trade deficit hit a record, which also led to further depreciation of dollar, and the high tariffs on the trade with China cannot even stop trade deficit from growing. Although the US dollar is still the world's #1 currency, the extreme QE policy from the Federal Reserve, which I called the nuclear-powered dollar printing machine here, has led to an indirect inflation globally. And by the way, since the trade war, because of the US government's restriction on dollar transaction with China, it made the Chinese government to reconsider its currency policy. Secondly, back to Chinese economy. Since China abolished the dual-track exchange rate system, a much stricter currency control, in 1994, the Chinese central bank has been adjusting the exchange rate float according to the global market. The behavior helped Chinese import and export to grow and ensure China accumulates wealth steadily. According to WTO statistics, China is already the global leader in trade and became the world's second largest source of foreign investment in 2019. While the volume of RMB transactions is less than 2% globally. Compared to the scale of foreign investment and trade, the volume of RMB is obviously small. Since 2018, conflict between China and the United States on the trade has not stopped yet. And in the long run, there must be more obstacles on the growth of Chinese economy. And its shadow bank problem has been very serious in recent years. So, abandoning currency manipulation will help its trade and international investment, keeping economic growth. In fact, under the pressure of trade war, China has already opened up its financial controls in many areas, and the latest behavior is just the final upgrade. In Mendelian triangle theory, independent currency policy, free capital flow, and fixed exchange rate cannot even be achieved simultaneously. And the cases where all three were done definitely lead to financial risk, like the 1997 Asian financial crisis. Therefore, both in theory and in practice, China cannot even maintain its previous monetary policy forever and have to begin giving up currency controls. So, is it a huge challenge for the US dollar? 100% sure. In fact, the RMB has been challenging the US dollar for many years, no matter in oil trade with Iran or investment in Africa. However, the RCEP signed between China and Southeast Asia in 2020 will accelerate. In the future, Within the world's largest FTA, the free-flowing RMB will become its anchor currency, which will certainly reduce a huge proportion of US dollar in global transactions. And China still has other platforms that will be built in the future, like China-Europe Investment Agreement or China-Japan-Korea FTA. Just have a look at here. China has become the largest trading partner of 128 countries, which is much more than America. Especially the outstanding performance of the Chinese supply chain during the pandemic also attracted international investment and capital more. In contrast, India or Vietnam, which was expected in the past, exposed their vulnerability and crisis. In addition, according to the estimates of many international consultants, China's GDP will surpass the United States by 2013, but a rising exchange rate will certainly accelerate. The phenomenon above will certainly reduce global confidence of dollar. More seriously, the decline in dollar's share of global transactions will certainly challenge the US leadership of world economy, because apart from trade and investment, the dollar is already America's only absolute advantage over China in economy. Besides, China has independent politics and defense, which means it will not compromise with US like Europe or Japan, just like what we have seen during the trade war. So the challenge will be very fatal to the dollar. But change will not be that fast, for quite a few are still in play. And some difficulties like the European Parliament froze the ratification process of China-Europe Investment Agreement on May 20, saying the move was in response to Beijing's sanctions against the Euro Parliament members and the human rights issue such as Hong Kong and Xinjiang. By the way, if no exchange rate target is set in the future, the flow will not be so stable anymore. It means China needs to face unknown shocks in the currency market. Of course, as the world's second economy, China has a very strong immunity. China has maintained a very strong growth through the 2008 financial crisis. But this is their first time they have to face a free flow of currency. So the risk is also potential. We don't know whether the US will intensify the conflict against the challenges in technology or trade with China. But we can be sure huge shocks in global financial market in the future. And the battle has just begun. Thank you for watching my video, and you can tell me what you want in my comment. See you guys.